Hey guys, we are live for the 112th Redroom, if I'm correct. The numbers just keep running together on me. Um, and Thanksgiving holidays are over. We got a couple weeks where we're going to do a couple more podcasts between now and when everybody just kind of hunkers down for that 10 days and just, spends time with family. But interesting enough, in the Phoenix market, I don't know if anybody's been paying attention. So we got to, and I haven't looked up the data, but we've dropped from about 25,600 listings about 2 weeks ago. Last time I looked to 24,100. My guess, if I were to look at the 1,500 unit drop in the last few weeks, my guess is it's a couple people just taking it off the market. I don't want to deal with showings over Christmas. I'll see you back here, whatever, 5th of January, or, obviously there could be some people buying. The 10-year is down around, it's just like hovering at that 4%. I got to feel like some of that has to be from, Bitcoin going from 126 to 85, which is, ripping down, like 30% almost. And I don't know if do any of you guys own any of those little coins like the Dogecoin or any of that?
Mm-mm.
Very little.
Okay. Well, I was just, I watch Kevin O'Leary every now and then. So and so I was like, he was on there talking about, he called them shit coins, I guess. So I had to go look it up. Like Dogecoin is down like 71% this year. So clearly, and I'm not going to be pretend to be some crypto genius, but I do watch a little bit of the news. Like obviously those stable coins where you can use them at different locations like Walmart and Amazon, and some of that stuff has trended, like the little coins kind of out of the business, if you will. And like I said, I'm not, but I kind of feel like people running from, stocks, Bitcoin, the safe haven is always the treasury bonds, right? Whether it's a 2 or the 10. So, we've stayed right at that 10-year at the 4%, which keeps our mortgage rates at about the 6%. Now we've seen less. We've seen 5.75, but I mean, I kind of feel like 6 is the new normal. So I don't think they're going to lower interest rates in December. Just my opinion. But once again, that's a short-term rate. So I think as more people sell off to stuff and they buy more of the 10-year bond, maybe it'll dip into the 3.75, which will put mortgage rates at 5.75, which I believe would be a great spot to start our 2026. Because, I mean, it's been a little rough in 2023.
Right. Yeah.
No, I don't know what you're talking about.
Yeah. I think of the Bitcoin and those sort of as like, I had a great time at the Phoenix RIA casino night. And the last few years I've never bet. I'm a horrible gambler. I never gamble, right? I'm a real estate girl. But I was at the roulette table, played a couple hands, did okay, or whatever you call it. I just put it all on red because of the color dress I had on, and I ended up winning everything. But after that, I lost terribly, and that's kind of how I feel like with Bitcoin and these sort of things. You gotta bet what you're okay losing, because who knows what the next hand is going to deal. So I do see what you mean, and as far as people wanting to get into something more stable, I think that's what a lot of investors are looking for, as evidenced by the luxury market also fluctuating too, because of what these other asset types are doing.
Yeah, for sure. I mean, yeah, the people that have the money to play with that stuff have the money to just pay cash for houses, right?
Yeah,
bet it on red.
I think to what you're saying, Chris, is that you've got people that have been on the sidelines for quite a few years now in real estate, and the biggest reason being is obviously interest rates. Where when it comes to investment properties, if you're only putting down, I don't want to say only because it's still impressive, but I mean, if you're only putting down the 20% that, that most lenders are asking for, there's not a very good chance you're cash flowing very much. I mean, maybe you're cash flowing a tiny bit, but when those interest rates have been, 7-8%, no, it's not going to cash flow very much. And so, I mean, it's really just been kind of a place to just have your money sit, to be honest.
Yeah. All right. Well, with that being said, a little recap of the market. TJ has joining us today, and he's been to a couple of our RIA events. And actually, TJ has decided to sponsor Phoenix RIA next year, which is I appreciate.
Yeah.
And he's going to kind of give us a little insights. And we were talking offline, so he just finished and sold a property. So real estate investor / financial advisor. So he's kind of got a little bit of the both worlds and how to play in both those worlds.
Heck yeah.
Cool.
Yep, absolutely. Couldn't have said it better myself. I worked in traditional investments for about 12 years between Vanguard, USAA, Massachusetts Financial Services, and then a buddy, I don't know if some of you probably know, Ross Ferraro, pulled me into the real estate investment world.
Nice.
Got a real estate license, and I've been flipping, kept a couple of rentals ever since. We just got one under contract like last week that had sat for 5 months, give or take.
Heck yeah.
I'm doing a financial advisor role now. Started with the life insurance space, so a lot like what Mr. Burr is talking about. The cash value, accumulated cash value life insurance, especially with real estate. You accumulate a chunk of cash value, borrow against it, buy a house, put it back, and you're making money 2 places, right? So compounding your returns. And I'm studying to get my investment license back again. Should be early next year, so we can go do some of the stocks and bonds and ETFs and all that fun stuff as well. Beginning of next year. So that'll be fun.
Yeah. So with playing in both markets, where do you kind of obviously you've been in the financial markets, and obviously you pay taxes like the rest of us. So where do you kind of feel your balance is between stocks, Bitcoin, then life insurance, then real estate rentals? Where do you see the balance? I got to admit that I'm 100% all real estate. There is no diversity here.
Yeah.
It really depends on what you're comfortable with, right? It's going to be different for someone in their 20s who has a long time horizon versus someone who's 65 and wants to retire next year, right? So you definitely want to use different asset classes, but I don't have, unfortunately, a one size fits all answer because it's different for everybody. Yeah. You don't want to be 70 and all your money's in exchange traded funds or Bitcoin or something, and then you can't retire and you're greeting a Walmart for a while, right? No one wants to be in that spot. But I mean, talking about stable investments, that is one of the places I think cash value life insurance can shine, because it doesn't lose money. Like the market goes down, it doesn't lose money. You either earn interest on your money for the year or you don't. But you don't have to worry about, it's going to tank or we're going to lose 40% in a year or anything.
Right.
Like but it's, sorry, I don't have a cut and dried answer for you. There is an old adage from the textbook. If you take your age and divide it into 100, that's the percentage you should have in fixed income, and the rest of it should be in stocks.
Okay, hold on. What was that again? Trying this out.
Luke, take your lunch money. Put it
Come
in
on.
portions.
Take your age and subtract it from 100.
Okay.
And the remainder is how much should be in stocks.
Oof, in stocks?
Now, this is traditional financial advisor land where they look at stocks and bonds, and they don't really mix in the real estate and the other life insurance piece. I'm still most heavily in real estate. I am. I've got some stocks and ETFs. I've got some an annuity actually as well, and some cash value life insurance. But most of the dollars are still in houses.
Yeah, so just, I mean, we hear it with Mr. Byrne, he's been on here, but just we'll do a 2-minute recap or 3-minute recap on just like what the life insurance means. So you can put it into a life insurance vehicle, right? And then you can borrow against it for like down payment on your, well, if there's enough, you can just buy a house with it, right?
Yeah.
Yeah.
Pile enough in there.
But if someone took like 50 or 60 and bought a policy, then they could borrow the 50 or 60 for a down payment, do the rehab, sell the property, and then repay the money. Now, does it all the profit have to go into the repayment or just what you borrowed?
Just what you borrowed. Okay. Just what you borrowed. They limit how much you can put into it. So if you borrow 50 or 60, you likely can't put back much more than the 50 or 60.
So like with my 401k, like I tend to I'll flip houses and then, expense the rehab, and then when it sells, then all the cash goes back in tax free. You can only put a certain amount back in, right?
Correct. Absolutely. Okay. Yep. The nice part with, when the 401k, if you're talking like self-directed 401k, IRA working with, the nice thing with using life insurance instead of probably in addition to really, I probably do both. But the life insurance, it will pay you on the 50 or 60 that you borrowed out because it's a loan. You're not withdrawing.
Yeah.
You're borrowing against it. So they'll charge you interest, but they'll also pay you interest on it. So the tough part is, are they going to pay me more than I'm paying? We hope so. So. It's not guaranteed though, right?
And what's that usual number? Like, let's just say I'm borrowing it from the insurance company and I'm paying 6%. What's the usual dividend? Does it cost me like 1% overall generally, or what's that number look like?
If you're borrowing right now, it's about 5.5%, 6%.
Okay.
They'll charge you on the money.
And then what are they paying?
That's the part that's not guaranteed. Yeah. So it depends on the type. If you have an index like a universal, it can track with a market index. If you have a whole life, it's based on the company's performance. They'll typically guarantee that they'll give you 3 or 4%. And then if the company does well, they'll pay you a dividend of however much they make, right? So maybe you make more, maybe it's free money, maybe you don't. But it does give you a nice place to park in between, right? Well, if you've got a month or two while you're working for your next flip, pay you interest on it, which is going to typically be more than the bank. Mm-hmm. And then later on down the road, one of the nice places you're talking about the 401k, you can do, there's 2 different kinds of loans. There's I'm going to pay it back loan. And then there's I'm not going to pay it back loan. It's still a loan, so it's not taxable. No, I should say I'm not a qualified tax advisor. You can take a loan that I'm not going to pay it back. They'll charge you 0%. And it basically comes out of the death benefit. But you could take a loan and supplement retirement income down the road. So either pay it back loan or not going to pay it back loan. Like I say, it can be used as a tool or another asset class to invest in.
Cool. What else? Do you use it for rentals at all, or just or fix and flips, or what's your sweet spot with that asset?
I like fix and flip because, kind of like Luke said, it's not the easiest thing in the world to cash flow a property right now with rates and prices where they are.
Yeah.
I'd love to keep a dozen properties a year, but if you're making $80 a month, then that'd be good, right?
Wait, you're making money?
Yeah, well, you guys are getting paid to do this?
You guys are getting paid?
Just counting on that appreciation.
You mean you guys didn't get the call from your plumber today and she shows you water just dripping out of her shower?
No, actually, it was a garbage disposal last week. It wasn't.
My ceiling caved in on the laundry room in one of my rental properties from all that rain last week. So that's fun,
Yeah.
That's the exciting part. Yeah,
absolutely.
Those frantic calls from the tenants, and then come to find out it has nothing to do with the rain. They just didn't notice the faucet was coming off the wall, and so there was water seeping into the walls and the carpet. And they,
oh my goodness.
Yeah, it's good times.
Oh man, fun stuff.
But with
And
that TJ, I'm sorry, Chris, go ahead.
I was just gonna say, so if you have just one of those like calls like I did with the plumbing, even if you were making $80 a month, it's that $80 a month.
Gone.
Yeah, gone.
The whole year, right? Yeah.
Easily.
Oh.
Got that right.
Go ahead,
So
Tracy.
are you finding that investors are just trying to balance what they have with where they're at in their careers, maybe try to get an outsized gain, for instance, with a flip, and then try to get something of a return if they have hundreds of thousands of dollars sitting around with trying to make something better than their bank or maybe even an index fund? Is that sort of the profile of an average client for you these days?
Average client I've been working with lately actually has been more business owners in other industries who want to not necessarily use the cash value life insurance for real estate investing, but use it as a pseudo retirement plan. Like Chris was talking about, individual 401k, because the money can come out tax free later. We can set it up where the death benefit is pretty low. So the cost of the actual life insurance is pretty low. And then they can just contribute to it like you would a 401k and withdraw in retirement or as they need it. I mean, you never know. You have a bad year in business. Houses sit for a while. Maybe you need to borrow some money to keep the business going.
Right.
Yeah, I just worked with an SEO guy, social media, and we did a couple of term policies for him just to protect his family if something happens. So it's tough because it really just depends on the client situation and what they need, right?
Yeah.
Oh yeah.
Especially life insurance can be kind of a Swiss Army knife because you can use it for a bunch of different objectives, just depending on what you want to do.
Luke, houses never sit for a while, do they?
I've never seen it. No, I mean,
Yeah.
the longest I've ever seen a house sit is I think like a week or two, right?
Oh.
So I think that's usually the longest they go, right? I think that's like I think legally, somebody has to put an offer in before that time frame.
Yeah. Well, that's good to hear because my budgets never go over either, Like
Yeah, exactly.
I'm always on budget and we always get done on time. So I'm glad to hear that your inventory is flying off the shelf.
I will say one thing is that in the last month, like kind of back to what you were saying earlier, Chris, but in the last month, things have definitely been moving way more than they were for the previous year. At least that's what we've seen. We had properties that were sitting on the market for a while, and we started getting just a ton more showings and a lot more offers. And so I think we had 4 go under contract in the last 10 days, I think. So
nice.
I don't know why, but yeah, so we definitely did see a little uptick for whatever reason.
So that's kind of an interesting strategy. You say some people use the insurance and then put it into the 401k. Did I hear that properly, or like?
No, in lieu of or instead of a 401k.
Okay, yeah. So they might be just trying to maximize what they can. They can put X amount into the 401k. Tax deferred, and I forget, is the insurance that grows tax free, but it's not tax deferred, correct? Or it's not a write-off? I'm not probably.
It depends how you structure it. So
Okay.
if you're a business owner, you can structure it so the business pays for it.
Okay.
Because you're a key person. And if something happens to you, then there's a detriment to the business, right?
Yeah.
It makes it harder to get out later because then when you're loaning against it or borrowing against it, it's the business's money. It's not your money.
Yeah.
But it can grow. Yeah, it grows essentially tax-free like a Roth. But in most cases, you're putting in after-tax money as well, unless it's business owned.
All right. So if it's you personally, it's after-tax money, but it's growing tax-free like a Roth. And then, but if you wanted to write it off, you could like do a key man policy or something like that, and have the company pay for it for you because you're the president of the company, and without you, the company doesn't run. And so now you're deducting it from your business, which will lower your corporate taxes, which follows, like most of us are S corp people, at least I am, that flows to like us personally. But if we can take as many deductions on the company, then less personal taxes.
Right. Yeah.
Not that I'm a CPA, but
Yeah. None of us are CPAs or
Just-
qualified tax advisors. Please talk to your tax professional.
Yep.
Chris just plays one on TV. Speaking of which, so explain the Batman insignia behind you.
I know. Heck yeah, I was interested in that too.
Yeah.
This is Van Gogh Starry Night, I think. I found a gal on Marketplace that painted it with the bat signal.
That's
Oh,
awesome.
okay. Yeah, I see it.
He's been my favorite since I was a kid. He's got no superpowers, but he's still hanging with the Flash and Superman.
Heck yeah.
yeah.
This one I bought for my house, and my wife decided it shouldn't be in my house. So
that will happen.
That's cute. It's going in the garage or in the trash.
Yeah.
You know,
Take it to work.
similar stuff happened with me with Viking memorabilia, and it was not staying in the house. It got shoved into my office, so I'm staring at it right now.
There you go. You have a design Ford theme in your office. We'll put it that way.
Yeah, exactly.
Now, what happened to that? Did you do a little change of the background, Luke? Like you got some pictures in a tree, not a bookshelf.
Yeah, I'm a little bit different location right now.
I was gonna say your location seems different.
Yeah, it's a different location. I'll be I can hit back to the bookshelf next week maybe.
Yeah.
Oh yeah.
So what other ways can we get financial service? 401k, life insurance. I mean, depends on the age. Like I'm the oldest one here. I think I double Luke's age.
You do not even close. Not even close.
Look, cut off sleeves. It takes off 10 years.
Yeah, exactly. Cut off sleeves and tattoos
Wait,
take off
write that
10.
down.
Exactly. That's why I cut him off.
Takes off.
But so we can't really tell people, but just a mix of investing. But you're like, I always wonder like why the big financial services companies never like reach out to like hard money guys. They get paid for what they manage, right? So if they manage $1 million, they get paid like 1% to 2% for management. Is that the number ish?
Yep.
Does it matter if they're in a giant like Charles Schwab versus independent XYZ?
It does, yes. And some of those fees are negotiable depending which broker you go to. And there's AI robo-advisors that will probably do it for less. The reason they typically won't reach out, you're talking about hard money lenders
like
to invest with
no one
you.
calls me and said, "Hey, here's $5 million."
Right. We mostly can't.
Okay.
There's a lot of regulations, and that's kind of what I'm reading through now to study for the test for next year. Most of the securities that we are able to invest in have to be registered either through the SEC or FINRA, or registered on a state level if you're talking about municipal bonds or something like that. There are real estate investment trusts, and I don't know if you guys have talked about putting together a fund where we could pool money and invest it in properties or lend it out as hard money. That's definitely doable, but if you've got your license, it's a fine line on what you're allowed to do without losing your license.
Gotcha.
Makes sense. I could see that.
So I actually started a fund like 6 months ago. I was on with Dom a couple weeks ago, 3 weeks ago, and he helped me build the fund together. So actually, and that is registered with the SEC, and then I have to register it with every state where someone submits money. So I'm currently registered, I think, in California because I have an investor in California, Arizona, obviously, Florida. I think that's the only 3 states I'm registered in because those are the places where, and actually I have a company that just charges me $50 to make that state registration. But now that I actually have a fund, I could reach out to guys like you or other financial advisors and say, hey, this is a fund. It's registered with the SEC. It's registered in your state, and give me some cash.
Give me some money. If you
That's
put
the
it together,
proposal.
You didn't think that was a good closing line, Tracy? Give me some.
I mean, it seems
I like
really
it.
professional. I like that it's to the point. So.
I'm in.
Yep. How much?
That sounds like it should be on a t-shirt. Give me that money.
Yeah.
Exactly.
Oh, we did tease a little bit of tax tricks. So I did have one strategy that I learned from a lawyer recently.
Okay.
Have you guys heard of that 453 deferred sales trust?
I'm not.
No. All right. So it's a way to sell a highly appreciated or highly valued asset without taking the tax hit up front. So you basically transfer your real estate, crypto, if it hasn't taken a beating, stocks, pretty much any asset under the ownership of the trust. It's got to be a specific trust, and be very careful with any lawyers that you set one up with, because if they screw it up, you're going to be in trouble with the IRS, and none of us want that.
No big deal.
They set up that you transfer, say it's a house, $1 million house, you got $500,000 in equity, right? I don't want to write an IRS a check on $500,000. You put it in the deferred sales trust. The trust sells it. The money stays in an account in the name of the trust. And over, depending how it's structured, over 10 years, 20 years, they send you the cash. They distribute the money. And you pay taxes on the money that comes out. The nicest part is that can be reinvested. The whole $1 million can be, well, no, I'm sorry. In that scenario, we were making $500,000. The whole $500,000 can be reinvested. You don't have to write a check for 150 or whatever it would be to the IRS. You can invest in pretty much anything you want, but it does have to stay in the trust. You can't just take it all out, or then you write a big fat check.
So I should search people that have this 1004. What was it called?
453 deferred sales trust.
453 deferred sales trust. I need to reach out to those guys and say, I got a hard money fund, right?
I'll send you a check every year. Yeah.
There you go.
Yeah, that way if they had $500,000 and they took out 10% a year, but I was paying them a 10% return, it stays the same, right? Yeah.
Yep. And it stays the same. You can pass that 500 to the kids down the road or whatever. Yep.
Cool. Any other questions, guys? What do you got?
I feel like this is more your lane. I'm not the annuities and 401k, and I'm mostly real estate gal.
Same. I know. I'm in the exact same boat. I don't know much about any of the things we're talking about besides real estate. That's
you know, 100%.
I know that I tend to take about probably 90% of our income on a yearly basis and just shovel it back into real estate every single year.
There you go.
So, I mean, I don't, whether that's right or wrong, I have no idea. We'll see, but we've been doing that for quite a few years now. And so I don't know, we'll see how it all turns out at the end.
Yeah. That's the important part. I think
for someone who's maybe ready to get out of the real estate game and stop taking calls from tenants and that kind of stuff.
Yeah. Oh, for sure. I mean, that sounds magical. I mean, it really does, to not have to worry about a lot of that stuff, But I mean, we do, TJ, my wife and I do a lot of Airbnbs. So that's kind of like the majority of our rentals that we have is Airbnbs up north. And so we have somebody that's on basically like full time that's up there that is basically the Airbnb manager. So we don't have to handle too much of this stuff. Like obviously it trickles down, to us eventually where it's like, hey, this happened. What do you want to do? Stuff like that. Who do you want to call for this? So that's kind of the route that we've gone. From what we've seen is over these past few years, what we were just talking about is not being able to get, properties to cash flow. But if you have a solid, Airbnb, they will definitely still cash flow if you can get, solid rents from your Airbnb bookings. So that's the route that we've gone, and we just do wild Airbnb stuff. Like, we do crazy stuff. So
like the Hobbit house. And,
Hobbit
all
house,
sorts of cool stuff.
Speakeasy and wild stuff. So we've got our next one coming. I don't know if I haven't really told too many people, so I guess I'll say it on here first, Tracy. The new one,
Sage was.
Oh, did she already tell you?
Yeah,
okay. She might have already told. Oh, yeah, she probably told you at casino night. So
yep, yeah, I'm super excited.
It's TJ, we're doing one that's going to basically be like a castle and dragons and stuff like that. So it's great.
That's cool.
It's going to be pretty wild. we're putting like a 10-foot like a 10-foot tall by like 10-foot wide metal dragon out in the front yard. It's going to be, like I said, a little crazy, but it'll be fun.
I have 2 boys, they would love that.
Yeah, the kids are going to love that. No, seriously, that's what I want to have, like a shelf in the front right when you walk in, like when guests come in, where it's going to be a bunch of foam swords and whatever shields and stuff like that.
Yeah.
So they throw all that stuff on as soon as you go in, and then
Yeah.
prepare for battle.
Just there's people jumping out.
Yeah, exactly.
Give extra for that. Yeah.
Right. So.
Well, and I'm more with, I'm more with Chris too, where I just am diversified among real estate. I just try to see what returns and what the risk is if I were to try to cash out or pull a lot of money out and do a lot more nuanced things. And I just kind of continue to find that based on what I'm trying to create and the time and effort that it does or doesn't take me, that it's just, I'm better where I'm at right now. But this stuff is really intriguing. So I think for investors that are either business owners as well, it sounds like that's sort of the more of your target clientele, right, TJ?
Yeah.
Heck yeah.
Well, cool. TJ, we appreciate you jumping on. We try to keep this like at 30 minutes. Like I said, it's just a living room talk, but we appreciate you sponsoring not the Red Room, but the Phoenix RIA next year. We are back the 3rd Tuesday of January for another round of
Heck yeah.
Of
2026.
2026.
Absolutely.
Meetings, education, networking, all of it. So if you watch any of this, follow, subscribe, reach out to Tracy, reach out to Luke, reach out to TJ if you're looking for someone in the financial services industry or life insurance, and we appreciate you watching.
Awesome. Thank you guys for having me on.
Thanks, TJ. Of course.
Thank you.
Thanks.